Hey, everybody, we are going to do the first of a three-part series on some of our favorite Buffett stocks to watch and maybe invest in. Before we dive in, Tyler Crow is joining me, but please check out the link you see on your screen right now, fool.com/Frankel, for the top 10 stocks to buy from the Motley Fool. It's the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So today, Tyler, we're going to dive into Bank of America, and for good reason. It's not only, you know, one of Buffett's favorite investments. He's talked about it as his favorite bank a few times. It's also one of Berkshire's biggest investments, and it's been in the news quite a bit lately because Buffett has been selling shares. So right now, I'll just kind of give you a quick snapshot before we dive in. Berkshire owns a little over 858 million shares of Bank of America. We know its exact stake at any time because it owns more than 10% of the company and is required to let us know when it's trading. It's kind of why the Apple sale was a big surprise, because it's a less than 10% stake. Bank of America, Berkshire still owns about 11% even after the sales. It is now Berkshire's third largest investment. It was its second for a long time. Now it is its third largest investment behind Apple and American Express, and it is worth about $33.5 billion, Berkshire's stake, that is. So Buffett has sold about $7 billion of Bank of America since mid-July. We don't know why. Buffett hasn't said anything. Bank of America CEO Brian Moynihan recently addressed it and essentially just said, we don't know, and we don't care. We're going to be fine regardless of who our investors are. But I mean, my thought is that Berkshire just seems to be right-sizing some of its winning positions. Bank of America is a highly profitable investment for Warren Buffett. If you're not familiar, the story is that he invested $5 billion in the wake of the financial crisis in preferred stock, not even Bank of America common stock, but the preferred stock he got came with warrants to buy common shares. I want to say the exercise price was $7.14, something really low. Bank of America is like a $40 stock right now. So fast forward a few years, Buffett ended up exercising the warrants. That's where the first 700 million shares that he owned came from. And he added to the position a little bit over time. At one point, owed more than 1 billion shares. But anyway, the long story short, Berkshire's cost basis in Bank of America is under $10 a share. So it is a highly profitable position for Buffett and his team. And just like with the Apple position, it looks like they are just kind of right-sizing some of their profitable positions. I don't believe they will, entirely exit Bank of America. But Tyler, let me bring you in on this. So what do you make of Bank of America right now? Are you concerned about the business? Do you think Buffett's concerned about the business? What do you think?
I don't think so. I want to point something out that he mentioned at the May annual shareholders meeting, where everyone says it'd be like the surprise of Apple selling. He actually kind of hinted at it in the May meeting, like maybe cutting it for tax purposes, like in some event that there was a change in a tax regime based on a change in administration for corporate tax purposes, it'd be a good time to sell a little bit. So there's a possibility that selling a little bit of Apple, selling a little bit of the very, very large positions in the portfolio, that may be connected. I don't. Again, we're kind of trying to use crystal balls or use some being John Malkovich kind of tunnel to get into Warren Buffett's head to figure out what's going on here. But, just kind of throwing out some possibilities as to why this is. And I think that's important because for most people, following Warren Buffett is kind of a tried and true tradition for a lot of people who are looking for good stock ideas. And if obviously he's selling, it's like, well, what's wrong with Bank of America? And I don't necessarily know that that's the case. We've mentioned it a couple times in videos before. We're playing a very different game than Warren Buffett is. Like, he's got to manage billions upon billions of dollars. Why he's selling or buying something at any given moment may or may not be the best move for any individual, because to be honest, we're just playing different games than he is. So it just, as an exercise, I kind of went through some of the most recent investor results at Bank of America, just as like a double check to be like, okay, well, what is there anything that there may be as a sign of weakness or maybe something that doesn't look great? And on the whole, obviously, I think everything, like you just said, it still looks like a very solid bank. It has a good core depositor base. Its capital tier one capital ratios look really good, so it has tons of capital to kind of bear the brunt of a decline in interest rates or a decline in default or an increase in default rates or anything like that. Those protections that you'd want from a conservatively run bank appear to be in place. A couple things that they noted that I was a little surprised at was I think a lot of people or a lot of us financial talking head writers, whatever you want to call us, we've been talking about, how interest rate cuts are going to be this thing to unlock the business for a lot of banks and other companies where interest rates are other companies where they're very sensitive to interest rates. But what was surprising to me as I went through Bank of America's projections, and they were actually saying that declines in the federal funds rate could actually be a headwind to its net interest spreads versus kind of the assumption like, oh, it's going to be good, right? We get to pay less to depositors. And that's not necessarily a case, at least according to management. They said based on the assumption that we see a 25 basis point cut in September, November, and December, they were expecting about $200 million headwind to its net interest income. Not much. Like they brought in over $13 billion in net interest income in the second quarter. So not huge, but kind of goes at that point where, the interest cuts might not necessarily be the salve for every business that we may have expected them to be. Kind of the theory being like some of the depositors that they have, especially international clients, corporate clients, people like that, are still going to probably want some yield from their deposits versus, I don't know, your checking account, probably not, but there's enough of that there that it could be a headwind. And the other thing I was a little, this is a little anecdotally, it doesn't necessarily a sign of like distress, but the Bank of America really went out of its way in its corporate presentation to talk about the security or how safe, reliable, everything's fine in its commercial real estate loan portfolio, especially around office. It gave all the things of like loan to value for all of it, saying everything's going to be fine. We don't see any significant chances of defaulting on loan on the office CREs. Whether or not that's true, I don't know, but it was a interesting tidbit for me because I saw it and I said, man, they are really stressing this a lot more than you would normally expect from basically any other part of its loan portfolio.
Yeah, no, there were a few other things I wanted to add that Buffett might be seeing that he doesn't like. I mean, recession risk has been everyone's talking about that for the past year or so, but we're starting to see a rise in consumer loan issues, specifically in terms of like credit card charge-offs, things like that. Right now, things are they were very depressed during the COVID years. I mean, it was really easy to postpone payments on pretty much any loan you had and things like that. And then they started to tick upward and kind of rebound to close to pre-COVID levels. And the question became, is this just kind of a reversion to the norm? Is this a sign of trouble? And now we're starting to see that maybe it's a sign that things aren't going that well for consumers. Bank of America's 90-day plus delinquency rate on credit card loans, for example, it was just over 1% in late 2019, right before COVID. And again, that was a good economic environment. But now it's up to 1.1, about 1.25, 1.26%. So significantly above pre-COVID levels. On the other hand, we're seeing consumer behavior better than before COVID in a lot of ways. Lower credit card utilization, for example, than there was in 2019. So there's that. There's political risk. There's a lot of uncertainty related to the election. I don't think it's any secret, Tyler, that one party is in favor of looser regulations and one party is in favor of tighter regulations on banks. I don't think that's any big secret. But the business is looking good. I don't see any scenario where Bank of America takes a giant hit profitability wise in the foreseeable future, unless something like COVID or whatever happens, which hopefully that doesn't happen again. But I don't know. Do you think Buffett is done selling, or not necessarily done selling, but is more right sizing the position than getting rid of it entirely?
Yeah, I think it's probably going to be the latter. I mean, there's not any glaring weaknesses in this. Like you were just saying, yeah, there's some probably some hairy parts around the edges, but he stuck around with Wells Fargo for a very long time, and it basically was like until he basically lost trust in management is when he decided to sell. And that it doesn't sound like that's really the case here. Like it doesn't seem
No,
to be
he's a
any
big fan
significant.
of Brian Moynihan.
So probably as long as there isn't some like glaring scandal at Bank of America or anything like that, probably no, this isn't going to go anywhere.
Yeah, like I said, more right sizing the winners than anything. But Tyler, thanks for joining me. We are going to talk about another Buffett stock in our next video, so be sure to check it out. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.